How to catch up on multiple years of unfiled tax returns. Have you gone years without filing your tax returns? Maybe you missed 1 year and plan to catch up later. Then life got busy. 1 year becomes 2 years. 2 years becomes three. And before you knew it, you were several years behind. Now, every tax season that passes creates more stress. You receive IRS notices. You worry what might happen. You avoid opening letters. You tell yourself you'll deal with it next month. Then next month turns into next year. If any of this sounds familiar, this video is for you. Today, we're going to talk about what happened when the tax returns go unfiled, what the IRS can do, what the IRS usually does, and most importantly, how to start fixing the problem. The goal of this video is not to scare you. The goal is to help you understand your situation and give you a roadmap to moving forward. My name is Shane Harris. I'm an enrolled agent with Profit First Taxes. I work with individuals and business owners on tax matters and IRS issues. If you find this video helpful, make sure you subscribe because I'll be posting weekly content on tax resolution, IRS notices, payment plans, collections, penalties, and other tax topics. Now, let's get started. Let's start with the first thing I want you to understand. You are not alone. Many people have unfiled tax returns and they feel embarrassed. They feel afraid. They feel like they failed. They think everyone is filing on time and somehow they're the only person dealing with the problem. That is simply not true. Every year, there are taxpayers who fall behind. Some are employees, some are self employed, some are business owners, some are retirees, some are dealing with family issues, some are dealing with health issues, some are dealing with financial hardship, others simply are overwhelmed. I've spoken with people who were 1 year behind. I've spoken with people who were 10 years behind. The common theme is usually the same. The longer they waited, the longer the problem and the bigger the problem felt. The bigger the problem felt, the harder it became to take action. Eventually, they became stuck. If that's where you are right now, understand something important. You cannot solve a problem you refuse to face. The first step is deciding that you're ready to address it. You don't have to solve everything today. You don't need every answer immediately. You simply need to begin. Now that we've talked about that, let's discuss why people stop filing in the first place. One of the biggest misconceptions people have is that people who don't file taxes are trying to avoid taxes. That certainly happens sometimes, but in my experience, that is not the most common reason. Let's talk about some of the reasons people fall behind. The first reason is financial hardship. Someone loses a job, income drops, bills pile up. They're trying to keep a roof over their head, food on the table, and that becomes the last thing on their mind. And taxes become the last thing on their mind. Another common reason is divorce. Divorce creates emotional stress, financial stress, legal stress. Tax responsibilities often get pushed aside during this process. Another reason is illness. If someone is dealing with serious health issues, filing tax returns may not feel like a priority. Business owners often fall behind because their bookkeeping isn't current. They know they need accurate records before filing. The bookkeeping becomes overwhelming. The filing gets delayed. Then another year passes. Another common situation occurs when someone owes money. Many people mistakenly believe if they don't file, they won't have to deal with the tax bill. Unfortunately, that is not how the system works. Not filing doesn't make the debt disappear. In many cases, it makes the problem worse. Now let's talk about what the IRS actually knows. What the IRS know about you. One thing that surprises many taxpayers is how much information the IRS already receives. Let's say you work for an employer. Your employer sends the IRS a copy of your W 2. Let's say you're self employed. Your clients may issue Forms 1099. The IRS receives these copies of all of these forms. Banks, they report interest income. Brokerage firms report investment income. Retirement distributions are reported. Social Security benefits are also reported. Mortgage interest may be reported. The IRS receives a tremendous amount of information every year. So when someone says, I never filed, so the IRS probably doesn't know, that's usually not a safe assumption. The IRS may already have records showing income was earned. The issue is that the IRS often does not have all of your deductions and credits that belong on your return. The issue is that the IRS often does not have all of the deductions and credits that belong on your return. And that's where the problem actually begins. Now, let's discuss what happens when the returns remain unfiled. What happens when you don't file? First, understand that the IRS generally doesn't show up at your house because you missed the filing deadline. What usually happens is much less dramatic. The IRS begins sending notices. At first, the notice may seem routine. Some people ignore them. Others panic and throw them away. Neither response is helpful. As time passes, additional notices may arrive. The language often becomes more serious. The IRS is essentially telling you, we believe you have a filing requirement. The problem is that many taxpayers continue to wait. Months become years. The, the issue continues growing, and eventually the IRS may take additional action. Let's talk about one of the most important concepts in tax resolution: substitution for return. One of the most important concepts for taxpayers with unfiled return is something called a substitution for return, often abbreviated as SFR. A substitution for return is a return prepared by the IRS using information available to them. Now, here's the important part. The IRS is not trying to maximize your deductions. The IRS is not trying to lower your tax bill. The IRS is not searching for credits you forgot to claim. The IRS is simply calculating tax using the information that they have available for you. Imagine a self employed contractor earned $100,000. The IRS sees the income reported on a 1099, but the IRS doesn't automatically know about vehicle expenses, supplies, equipment, advertising, insurance, professional fees, home office expenses, and so many other deductions. As a result, the IRS may calculate tax based on the gross income rather than properly documented net income. That can create a significantly larger tax liability. I've seen situations where filing an actual return produced a dramatic different result than what the IRS substitution calculation came up with. This is one reason filing your own accurate return is so important. Now, let's talk about the cost of waiting. Penalties and interest. Many taxpayers think, I'll deal with it later. The problem is that later is often more expensive. Failure to file penalties may apply. Failure to pay penalties may apply. Interest may continue accumulating. Over time, a relatively manageable balance can become much larger. The longer a taxpayer waits, the more difficult the situation may become. This is one reason why I encourage people to focus on filing compliance first. Even if you can't file immediately, compliance often opens the door to resolution options. One of the most common questions I receive is this: how many years do I need to file? Answer is, it depends. Every case is different. Many tax professionals are familiar with the IRS 6-year compliance guidelines. However, that doesn't mean every taxpayer's situation is identical. Some people may need to address additional years. Others may have circumstances requiring a different strategy. This is why I caution people against relying solely on internet forums and social media comments. Tax resolution is highly fact specific. The best approach is to review your individual situation and determine exactly what is required. Let's walk through how to begin fixing the problem. Step 1: stop avoiding the problem. This may sound simple, but it is often the hardest step. Stop avoiding the issue. Open the IRS letters. Gather the notices. Create a folder. Take inventory. You cannot build a solution until you understand the problem. Avoidance creates uncertainty. Uncertainty creates fear. Fear creates more avoidance. Breaking the cycle is critical. Once you've done that, it's time to gather information. So, step 2: get your transcripts. One of the most valuable tools available is your IRS transcript information. Transcripts helps identify reporting income, filing history, count balances, IRS activity. Think of transcripts as your starting point. They provide a clear picture of what the IRS already knows. Without that information, you're operating in the dark. With that information, you can begin building a strategy. Now, let's gather supporting documents. Step 3: gather documents. Now, it's time to collect the records. Don't panic if records are incomplete. Gather what you have. Examples will include W-2s, 1099s, bank records, business records, expense documentation, mortgage statements, property tax information. Many people delay action because they don't have every document. Don't let perfection become your enemy of progress. Start with what you have. Continue gathering information as needed. Now it's time to take action. Step 4: file the return. This is where real progress happens. Prepare the return accurately. Report income correctly. Claim legitimate deductions. Review filing carefully. Review filing status carefully. Make sure everything is complete. Remember, The goal is not simply filing, the goal is filing correctly. A properly prepared return often places taxpayers in a significantly better position than an IRS substitution return. Now, let's address the biggest fear many people have. What if I can't pay? Many people don't file because they know they'll owe money. Here's what I want you to remember. Filing and paying are not the same thing. You may still need to file even if you cannot pay immediately. Once returns are filed, additional options may become available. Depending on your circumstances, those options may include payment plans, penalty relief, currently not collectible status, settlement considerations, and other collection alternatives. The important thing is getting compliant first. Many resolution options require compliance before the IRS will consider them. Before we wrap up, let's review some common mistakes. Common mistakes. Number one, waiting too long. Number two, ignoring notices. Number three, assuming the IRS doesn't know about the income. Number four, believing you need every document before starting. Number five, assuming you can't file because you can't pay. Number six, taking advice from random people online without understanding your specific situation. These mistakes often create bigger problems than the original tax issue. Final thoughts. If you're behind on your tax returns, understand that you're not the first person to face this situation, and you won't be the last. The important thing is taking action. Start gathering information. Start understanding the problem. Start building a plan. The longer you wait, the harder the situation often feels. But once you begin addressing it, you'll usually find that the problem becomes much more manageable. Before I let you go, remember this. Tax problems rarely improve by themselves. Many can be resolved when addressed properly. If you're dealing with IRS notices, unfiled returns, wage garnishments, tax debts, any other IRS issues, schedule a consultation with Profit First Taxes. The link is in the description below. Even if you aren't ready to hire someone today, subscribe to the channel. Every week, I'll be sharing information to help you understand your options and avoid costly mistakes with the IRS. If you found this video helpful, please like the video and share it with someone who may need it. Thank you for watching, and I'll see you in the next one.